Welcome to the 2025 Economic Depression and Preparation Channel. Thank you for joining me on this brief Sunday edition, February 23rd, 2025. Ladies and gentlemen, as we wind through the first half of 2025 fiscally and socially and politically and economically, we can see that things are changing on both the unemployment fronts and as well as the taxing front, as well as American consumer spending habits have been changing too as well. Some for good, some for the better, some for not good. As you can see, this is the official graph here of the civilian unemployment rate, which is currently around 4.5% as we speak. You can see the peak here in 2020 where it was up to 14% when we started the pandemic back in April 2020, almost 5 years ago. It was at 14.8%. Now, to be fair, a lot of these numbers were adjusted because, as you know, some people were furloughed. They were kind of like, put in a furlough state until they were able to get back to their jobs, especially if you're in the hospitality or retail or transportation sector. But now all that is past and coming down post-pandemic now, you can see the unemployment rate drop steady down to its lowest of about 3.5%. That was back in July 2023. And ever since then, it's been on the rise. Now we're back up to about 4%, according to the official numbers by the Bureau of Labor Statistics in January 2025. Now, I want to caution you on two things here. First thing is that I believe the unemployment rate this year will be increasing to somewhere between 5 and 6%. The official numbers, we know the unofficial numbers are closer to 10 to 12%, just like the unofficial inflation numbers are closer to 10 and 12%. You guys know that. You've been following the channel for a while. But as you know, on the good news, the two good news I see here is that the unemployment rate is not exactly spiking like this anymore. It's just kind of like going up steadily, just like the inflation is going up steadily. The bad news is both the unemployment and high inflation is not going anywhere anytime soon. And in fact, more cuts are coming, as you can see. Now, Walmart, according to CNNBusiness.com, Walmart warns of a slower 2025. That's a bad sign for America's economy. As you know, Walmart came in back in the 70s, 80s, got rid of all the small mom and pop stores. Very few places remain, and they're the monopoly. They're the dominant carrier, and rightfully so. I mean, you can go there, get your tires done, your oil. You can get household supplies, food, etc. So there's a lot to get there, but it's a bad time for the U.S. economy because with the tariffs coming, not only that, with people having a hard time keeping up because wages hasn't increased in the last 40 to 50 years, as you know, a real wage increase. And so the surplus is gone at the economy. We're now $36 trillion in debt, and Walmart sounded the alarm. Walmart warned Thursday that sales and profit growth will slow this year. Forecast sent its stock tumbling around 6% during early trading, dragged down the Dow, which fell more than 1%, as you know, back on Friday. So Walmart is the largest retailer in the United States, and it's a bellwether for consumer spending here. So customers looking to that were making more than $100,000 a year, looking to save on groceries, have fueled the growth at Walmart in recent years. But now Walmart has built a strong online operation to rival Amazon, supposedly. You can go and you can park in their little spaces, and then they'll put your groceries in your car now and stuff like that some of the Walmarts are doing. And, but they're going to have to navigate. Walmart acknowledged it has to navigate tariffs and manage other challenges. And this is going to be key, ladies and gentlemen. Like I said, the big 7 companies or 8 companies that control most of the United States economy in terms of products and services, we all know who they are. If they start slowing down profit-wise, even after they've cut employees or closed down stores, either in high crime areas like Chicago, like Walmart was doing before, or they're just closing down stores because it's not profitable, then that's going to signal a weaker time for this economy. We could be going back to a recessionary period. Now, the Fed is stuck in neutral as it watches how Trump's policies play out, President Trump's policies. So Federal Chair Jerome Powell, he's looking pensive. He testified 2 weeks ago before the Senate Committee, Banking, Housing, and Urban Affairs Committee, excuse me. And, they're just waiting. They're waiting. Will we get a rate cut this year? I don't think so. I think they're going to leave rates unchanged until the summertime, and then maybe we'll get 125 basis point rate cut. But at this point, the rate cuts are not the concern. The concern is going to be the unemployment and the job creation slowing down, and this economy slowing down outside of the major metro areas, that the 10 and 12 of America's major metro areas here. So, the Fed targets 2% inflation here. The goal that's remained elusive for 4 years. Make that 5 years. So we're not going to get to 2% inflation, just like we're not going to see 3 and 4% mortgage rates again, not anytime soon, ladies and gentlemen. So This is forcing many cities to think out ways to get more money, squeeze out more blood from the turnip from us American taxpayers and consumers. And you remember New York City had this congestion pricing here, this toll congestion pricing along 60th Street. As you can see, Brooklyn here from the Brooklyn Bridge going into Manhattan. They had this congestion pricing, but President Trump moves to kill this bill, according to CNN Business. Now, I don't want to get into the politics of it, but I do want to say that I remember I told you before on previous videos that these cities, municipalities, states, and counties, and all that, they're going to find ways to try to make up this lost revenue that's going to be happening from the job losses, not only in the government sector, but in the private sector as well. Remember, Southwest Airlines laid off a lot of people. A lot of the tech companies laid off a lot of people last quarter. And so they're going to find a way to make up these revenues by taxing other people. And these tolls is the perfect way to do it, because people have to get into these major lifelines by using these major roads. And so New York City Governor Kathy Hochul said on Wednesday that Sean Duffy, the transportation secretary, would rescind the agreement, effectively ending the toll structure which went into effect earlier this year. They had a congestion pricing plan, was a slap in the face, quote, to every working class Americans and small business owners, Duffy wrote. And a lot of these toll roads, is basically not saying that they're a scam, but they're kind of like a Ponzi scheme, because remember, if you got 100,000 cars or more traveling over these roads per year, these roads are paying for themselves over and over again. And a lot of these costs are going to administrative costs with the toll authority and all that kind of stuff. But that's another story for another day. But you and I know that, these roads are paid for themselves 10 times over. Especially if a road's been in existence for over 30 years, it's already paid for. And they just say it's maintenance, but it's not. They're making a profit off of these things, off these toll roads. And so cities and counties, municipalities are going to try to ramp up taxes and ramp up fees and tolls and all kind of stuff to get their money out of the American citizen. And President Trump has put a stop to that. And I think that's great, because we've already been nickel and dimed in other areas. Utilities costs going up. People are complaining in many cities, many major cities on the East Coast and in the Midwest about utility bills going up. Your gas, your sewer, your electric have been tremendously high, especially this wintertime. We've had a first cold winter we've had in quite some time. Many of the cities on the East Coast and in the Midwest and the upper Midwest too. And so this has been a concern. So let me know what you think. Let me know if you think that cities and counties and municipalities are going to try to continue to tax us in different ways, water tax or some kind of gum tax or health tax to try to make up for this lost revenue, even though they're cutting back on, they're trying to trim the fat and make government smaller and do other things. They're going to have to make up for this revenue somehow, because, it's not just the federal government that doesn't produce anything. The states and local municipalities don't produce much of anything either. And not only that, the private sector is not going to make up for it, because, like you say, the unemployment rate here is going up, and this includes the private sector unemployment. They're going to be making cuts too, as well, as the revenues go down from places like Walmart and Amazon and Target and all these other big companies. So we just have to wait and see what happens. But anyway, in the meantime, continue to get rest, exercise, sunlight, enjoy your family, your friends, as we get closer to this upcoming week here, as we get closer to the end of February and into March. Look forward to the earnings report coming out again the 1st of March, and some other things coming up economically speaking. But take some time out to enjoy life while you can. Prayers and thoughts go out to those people with shootings this week, specifically in Pennsylvania, I believe, and Virginia Beach. There was a shooting of officers. Thoughts and prayers go out to those families of our law enforcement officers, state and local, federal, and also for those families that are dealing with a lot of mental health issues in their family and stuff like that as well. So God bless. I'll talk to you soon. Thank you for listening. Be sure to hit that like button, and I'll see you on the next episode, God willing, later on this week, Tuesday. Thank you for listening.